my previous video, we have discussed what is cash flow statement and the three important activities in which all cash flows are classified. Today, we are going to learn the format of indirect method of preparing cash flow statements. There are two ways of preparing cash flow statement, direct method and indirect method. Both ways end up at the same answer but in different ways. Under both the methods, we have cash flows from three major activities. That is, cash flows from operating activities, investment activities and financial activities. The way in which we are going to arrive at the operating activities will differ. Under direct method, cash receipts from operating incomes and cash payments for operating expenses are presented in the cash flow statement. Under indirect method, net profit disclosed by the profit and loss account is taken as base. Necessary adjustments are made to the figure of the net profit to arrive at the net cash flow from operating activities. Let us now discuss the format of cash flow statement. Cash flow statement reports the cash flows of an organization during the particular period. So first write the heading cash flow statement, the name of organization and the period for which the statement is prepared. Okay, this is the format of cash flow statement which comprises of particulars and amount column. The first heading within the cash flow statement is cash flow from operating activities. We use net profit which we get from the trading and profit and loss account. If net profit given is after making adjustment for items like transfer to general reserve, proposed dividend, interim dividend transferred, provision for tax, which are usually shown in P&L appropriation account, we have to add back those items to the net profit. This net profit before tax and extraordinary item will be shown in cash flow statement. With the net profit before tax and extraordinary items, we have to add non-cash and non-operating expenses. Depreciation and intangible assets like goodwill written off do not affect cash at all, since they are shown as charges and losses in profit and loss account. Net profit reduces to that extent, but cash does not go out. So such charges should be added back to the net profit. Similarly, fictitious assets and capital losses like discount on issue of shares and debentures, preliminary expenses written off also do not affect cash. They are also added back to the net profit. When assets or investments are sold, the total cash received will be shown in the cash flow statement from investment activities. If there is any loss on sale of any asset, it will be added back to the net profit, and any profit on sale of asset will be subtracted from the net profit. After that, subtract any non-cash and non-operating incomes such as interest on investments, income tax refund, dividend received. After making adjustment for non-cash and non-operating item, we will arrive at cash flow before changes in working capital. Let me explain what is working capital. Working capital represents the difference between organization's current assets and current liabilities. Changes in working capital reflected in the organization's cash flow statement. So, you have to add a decrease in current assets and increase in current liabilities. Next step, you have to subtract the increase in current assets and decrease in current liabilities. After doing this, we will get cash generated from or used in operating activities. Then you have to subtract the actual taxation paid. You will get cash flow before extraordinary items. Next, you have to add any extraordinary income if the information given related to extraordinary expenses, you have to subtract it. Here, you need to know what is extraordinary item. Extraordinary items are non-recurring in nature. Example, loss due to theft, earthquake, compensation received from government, etc. Finally, you will arrive at net cash from operating activities or net cash used in operating activities. If the amount arrived is in positive, it is cash generated from operating activities. If the amount arrived is in negative, it is cash used in operating activities. Up to now, we have discussed how to arrive at cash flows from operating activities. The second part of the cash flow statement represents the cash flows from investing activities. We need to record the cash inflows from investing activities. The total amount received from the sale of fixed asset and any investment which will result in cash inflow. It will be shown under the heading cash flow from investing activities. If the organization receives any interest or dividend from any investment, those transactions will be shown under the heading investing activities. Purchase of fixed assets or investment results in cash outflow. So, we have to subtract the amounts. In this stage, we will arrive at cash from investing activities or cash used in investing activities. The third part of the cash flow statement is cash flows from financing activities. Cash flows from financing activities are proceeds from issue of shares or proceeds from issue of debentures, proceeds from long-term borrowings. These transactions results in cash inflow from financing activities. And next, the redemption of debentures and redemption of preference shares, repayment of loans and borrowings, these transactions results in cash outflow from financing activities. So, we have to subtract these informations. We will get net cash from financing activities or net cash used in financing activities. After completing all the above steps, we will derive net increase or decrease in cash and cash equivalents. Net increase in cash and cash equivalents will be added to the cash at the beginning of the period. If there is decrease in cash and cash equivalents, it will be subtracted from the opening cash balance. Finally, we will arrive at cash and cash equivalents at the end of the period. I hope now you clearly understand the format of cash flow statement under indirect method. Thank you.